get into my subject without any introduction. So directly we'll go to the topic TDS, TCS and advanced tax. These three items, that is TDS, TCS and advanced tax, these are together called as prepaid taxes. Prepaid. All these together, we call them prepaid taxes. Now, when will an item be called as prepaid? Let us come to the basics, accounting. When you pay something before the end of the year, before the end of the financial year, before that year is over, then that will be called as prepaid taxes or prepaid whatever, prepaid expense, whatever. Whenever you pay or receive something before the year is over, then that will be called as prepaid, is it not? So here when we talk about the income tax aspect, let us take the financial year 2020-21. Right, that is your financial year. Of course, assessment year 21-22, your previous year is financial year is 2020-21. Ideally, when would you file a return of income for financial year 2020-21? In most of the cases, majority of the cases, when would you file a return of income for financial year? Oh, sorry. I'll screen share. I'll share my screen right now. Please wait. Hope you can see my screen now.
Yes, ma'am.
Yes. Hope you can see it now.
Yes, ma'am.
Okay. So these three items, TDS, TCS and advanced tax, as I told you, they are prepaid taxes. So financial year 2020-21, ideally, when would you file your return of income for this financial year? When would you file your return of income for this financial year? Suppose you are not liable to audit. Then when will you file your return of income? Yes. Generally, we have to file a return of income after the end of the year, is it not? That is, after 31st March 21, we will go and file a return of income on 31st July 2021. That is the day on which you will be filing your return of income. Okay, you will be informing the income tax department the details of your total income, how much is your tax liability, how you have arrived at all those things. You will put it in the form of a statement and that will be submitted to the income tax department on 31st July 2021. But the income tax department says that taxes are to be paid. Taxes are to be paid in 2020-21 itself. You have to pay the taxes in 2020-21. Come and pay the taxes. All other calculations about your total income, all such things you can present on 31st July, but pay the taxes before the year is over. Before this year gets over, pay the taxes. And that way, both TDS and advanced tax, of course, TDS includes TCS as well. TDS, TCS and advanced tax will be paid before 31st March 21. All these taxes reach the income tax department before 31st March 2021. Okay. Now then, what is the difference between TDS and advanced tax then? So I told you the similarity. TDS, TCS and advanced tax will be received by the income tax department. That is, the taxes will be received by the income tax department before 31st March 21. Then what is the difference between TDS, TCS and advanced tax? Let me again explain that. TDS always includes, in this discussion, TDS always includes TCS, okay? Advanced tax is tax which is paid by the SSC himself. SSC himself pays advance tax. See, I myself go to the income tax department and I pay my taxes. It is not audible, Sana. Is there any problem with my mic?
No, ma'am.
No, ma'am.
Some are saying, audible. Some are saying it is audible, clearly audible. So I think that will be the issues at your end. I'm so sorry. I think it will be issue at your end. Okay. All right. Then, so I was talking about advance tax. Yes, advance tax is paid by the SSC himself. See, I go to the income tax department and I pay my taxes before 31st March 21. That is advance tax. Okay, I have to pay my own taxes. Now, let me ask you that important question. How can I pay my taxes for this year, 31st March 21, before the year is complete? Before the year is complete, how come I know how much is my total income? I have no idea about my total income before 31st March 21. How do I know how much is my total income for 31st March 21? How do you know how much is my tax liability for 31st March 21? So the income tax department says that you do one thing. What you pay as advance taxes, your estimated tax liability. It need not be an accurate calculation. It need not be an accurate calculation. We give you some leverage like 10% short or excess. We understand that. You pay your estimated tax liability. Now, how can I make an estimate? How can I make an estimate about my tax liability? Usually, what we do is we will look into what is actual tax paid for 1920, the earlier year. Usually, actual tax paid for 2019-20, let's just assume it is 5 lakh. That is my actual tax for 1920. I assume a 10% increase in my total sales or 10% increase in my total profit, whatever. So correspondingly, let us assume that there is a 10% additional tax also during this year. So I estimate that my total tax for now, depending upon your actual business conditions, it need not be always an addition. It can be a deduction as well. We all know during these COVID times, there will be always reduction in your total turnover and total sales and all that. So it can be a decrease as well, assuming that it is an actual position of your business. So you may decrease your actual tax liability from, you can decrease from the actual tax liability of earlier year as well. So in this example, what I have assumed is that there is an increase in my total tax. So I assume that my total tax for 2020-21 is 5,50,000. Okay, so that is how I make an estimated tax liability. Is this understood so far? We will go step by step. So is this understood so far? How do we pay an advance tax? We will make an estimated tax liability. So estimated tax liability means actual tax liability of the earlier year plus or minus increase or decrease, whatever we expect in our total business condition. So in this example, I have assumed that my total tax liability is 5,50,000. Fine so far? Yes? Okay. Now, once I get the estimated tax liability, so this is my estimated tax liability for financial year 2020-21. This is my estimated tax liability, 5,50,000. This is my total tax which I have to pay. Of this, 15% of the estimated tax liability you have to pay on or before 15th June of the financial year. Okay, 15% of the estimated tax liability you have to pay before 15th June of the financial year. Our financial year is 2020-21. Now, 15% of estimated tax liability will come to 5 lakh 50 into 15%, which is equal to so I will pay 82,500 on or before 15th June. Now, 45% of your estimated tax liability that has to be paid on or before 15th September. So 5 lakh 50 into 45 by 100, that is my total tax liability. So again, that will come to 5 lakh 50 into 45 by 100. But see, this is the total which I have to pay before 15th September. I have already paid to 82,500 in the earlier installment. So this installment, my tax liability will be, what I have to pay is 1 lakh 65. 82,500 I have paid in the first installment. By 15th September, I should have paid a total of 2 lakh 47. I have already paid 82,500 in the first installment. So now I need to pay only 1 lakh 65,000. Now 75% shall be paid on or before 15th December 20. So 5 lakh 50 into total 75%. This is the total amount which I have to pay, 4 lakh 12,500. But of this 4 lakh 12,500, you have already paid 85,000. You have already paid 1 lakh 65. So now what you have to pay is 1 lakh 65 again. And the exact 100% that has to be paid before 15th March 20. So before 15th March, you have to pay entire 5 lakh 50, but you have already paid this much. You have paid 82,500, you have paid 1 lakh 65, and you have paid 1 lakh 65. So the balance which you have to pay right now is 1 lakh 37,500. Altogether, this would make it 5 lakh 50,000. So this is how we pay advance tax as various installments. It is paid in 4 different installments: 15%, 45%, 75%, and 100%. Now, another question is, now by the time I file the return on 31st July 2020, I understand, 31st July 2021. By the time I file my return on 31st July 2021, I understand that my actual tax liability had come up to 6 lakh. Actual tax liability had come up to 6 lakh. What shall I do now? I should pay the extra 50,000 on 31st July 2021. Okay, the extra 50,000 will be paid on 31st July 2021. If the reverse happens, that is, if I understand that my actual tax liability on 31st July is only 5 lakh, actual tax liability is only 5 lakh on 31st July 2021. When I understand that, then what will the income tax department do? They will refund me that extra taxes paid, 50,000. Okay, so this is how the advance tax mechanism works. Advanced tax mechanism works. Now let us quickly go through the theory portion relating to this advance tax. Let's quickly go through the theory portion relating to this advanced tax. See, every person, can you see my screen? Yes. Every person shall be liable to pay advance tax before the end of the financial year. Before the end of the financial year, all of you have to pay advance tax. Now, what if you don't pay advance tax? What if you don't pay advance tax? You will be liable to pay interest. If you don't pay advance tax, you will have to pay interest. If time permits, I will come to the interest calculation as well at the end of the session. Time permits, let us see. But there are certain exceptions. The following persons are not required to pay advance tax. We all know that every rule has an exception. So here also, I exempt two category of persons from paying advance tax. Who are those persons who are not required to pay advance tax? One, persons whose tax liability is less than 10,000. If you have to pay only small amount as tax, small amount in the sense your total tax liability is not 10,000, then you need not pay advance tax. Second category is senior citizens. Senior citizens, they don't have to pay advance tax. Now, who is a senior citizen? Who is a senior citizen? Senior citizens are also not required to pay advance tax, but there is an additional condition attached to that. Senior citizen, if you do not have business income. If you do not have business income, then such senior citizen is also not required to pay advance tax. So there are two exceptions. Any person whose tax liability is not exceeding 10,000, any person, your tax liability does not exceed 10,000, then you are not required to pay tax. And second category is senior citizen, but senior citizen, there is one condition, that is you should not have business income. Senior citizen earning only salary, pension, such persons only house property income, such persons need not pay advance tax. And advance tax is to be paid by the various installments, which I have already explained. Now, there is one more exception. Do you remember in business, we were talking profits and gains of business or profession. We had discussed about profits and gains of business and profession. We had discussed about presumptive taxation. Those who pay taxes under a presumption, that is the income tax department assumes that 8% is your total profit, or the income tax department assumes that 50% is your profit, or they assume that 7,500 per month is your total profits. Those sections were 44AD, if you remember, 44AD, 44ADA, and 44AE. These are the various sections for presumptive taxation. Here it is 8%. In certain cases, it is 6%. I hope you're able to recollect it. Here it is 50%. Here it is 7,500 per month per vehicle and all. Anyway, 44 AD and those persons who are declaring their income under 44 AD and 44 ADA, they need not pay advance tax in all the four installments. They need to pay advance tax only on 15th March 2021. The entire amount of tax liability, their estimated tax liability, they need to pay only on 15th March 2021. Okay, they need not break it into four different installments. If 5,50,000 is what you estimate as your tax liability, pay the entire amount of 5,50,000 only on 15th March 2021. You need not pay it in June, you need not pay it in September, you need not pay it in December. Pay it only in March. But of course, 44 AE persons, they have to pay it in these four installments. 44 AE persons, they have to pay it in four installments. The only exception which I have given is for 44 AD and 44 ADA. So it's not a complete exception. It's not a complete exception from payment of advance tax. It is only that you need not pay it in four installments. You need to pay it only in one installment. Okay, and a complete exception was given for those persons whose tax liability is less than 10,000 and who do not have business income. Right? So I have completed advanced tax, but of course I told you there is one point which is pending there, that is regarding interest on interest. If you fail to pay advanced tax, how do you calculate interest? If time permits, I will come to that. But before that, let us discuss certain questions on advanced tax. Let us discuss certain questions on advanced tax. These are all MCQs in your study material. All there in your study material. Okay, let us take the first question. Let's take the first question. Mr. A, whose total sales is 201 lakhs, he declares a profit of 10 lakhs for the year 2020-21. He is liable to pay advance tax in how many installments? His profit is 10 lakh. See, his profit is 10 lakh. So he doesn't come under the first exception. 10 lakhs means his tax liability will be definitely more than 10,000. And he's doing business. That is why we are given sales. So he doesn't come under the second exception as well. And since 201 lakh is his total turnover, he cannot go for presumptive taxation. So what will be your answer? What will be the total number of installments for which he has to pay taxes? What is the total number of installments for which he has to pay taxes? Very good. He has to pay tax in all the 4 installments. Right? Very good. Very good. We'll come to the second question. These are questions in your study material. Mr. Raj, a non-resident, he is a retired person. See, non-resident and aged 65 years. Non-resident and ages 65 years. Right? Now, let me ask you your first question. Is he a senior citizen? Is he a senior citizen? No, he's not a senior citizen, because if you are to be a senior citizen, you shall be a resident in India. Since he's non-resident, he's not a senior citizen. So he's earning a rental income of 40,000 per month from a property which is located in Delhi. He's residing in Canada. Apart from rental income, he does not have any other source of income. Is he liable to pay advance tax in India? Is he liable to pay advance tax? Let us quickly calculate. 40,000 per month means total gross annual value will be 4,80,000. 4,80,000 into 70%. That is deduct that standard deduction of 30%. Standard deduction of 30%. So that will come to, I'll make the calculation over here. 4,80,000 is his total rental income. That into 70 by 100, because standard deduction 30%. So his net annual value will be 3,36,000. This is his only income. See, this is his only income, 3,36,000. And what is tax on 3,36,000? Let us just calculate. Tax on 3,36,000 is 3,36,000 minus 2,50,000 into 5%. He comes under the first slab, into 5%. 4,300. You have to add 4% cess as well. Anyway, even after adding that 4% cess, your total tax liability will be less than 10,000. Total tax liability will be less than 10,000. So there is no need to pay advance tax. Okay. So there is no need to pay advance tax. So that question is also over. Answer is B. He is not liable to pay advance tax as his tax liability is less than 10,000. Then we'll be doing question number 5. Let me mark in red the questions which we have already done. Question number 1 and 2 we have done. If you want, I can share this. I can attach this file as well. Anyway, question number 5. Benefit of paying advance tax in only one installment on or before 15th March is available only for. Benefit of paying advance tax only in one installment on or before 15th March is available only for. You need to pay only one installment. Yes, very good. Very good again. That is 44 AD and 44 ADA. Only these two persons have got this benefit. Yes, this is regarding TDS. Question number 7 is regarding TDS. Yes, question number 8. Question number 8. Mr. Jha, an employee of FX Limited, attains 60 years of age on 15/5/20. That makes him a senior citizen. See, he has attained the age of 60 years on 15/5/20, so that is a senior citizen. He is resident in India during financial year 2021 and he earned a salary income of 5 lakh. 5 lakh, salary income 5 lakh. During the year, he also had a winning from lottery of 7 lakh. So let me put it together. He is a senior citizen. He does not have business income. He is a senior citizen. He does not have business income. Mr. Jha has attained 60 years. He is resident in India. Resident and 60 years means he is a senior citizen. He does not have business income. It is salary and winning from lottery. So what will be your advance tax liability? Very good. Very good, children. There is no advance tax again. There is no advance tax. Question number 9, 10, 11. These are all regarding TDS questions. Okay. Read this question. Determine the amount of advance tax payable by Mr. Deepak with their due dates for assessment year 21-22. We have not discussed TDS and TCS, but let me explain the answer even then. Determine the amount of advance tax which is payable by Mr. Deepak with their due dates for assessment year 21-22. Total estimated tax liability is 5,50,000. Somebody should have deducted TDS. I have not explained TDS, but even then I'll come to that. TDS was deductible 70, but they have not deducted it. TCS collected. It is something similar to TDS, but again, I will explain that. TCS is 20,000. See, TDS and TCS is tax which is paid by tax which is paid by somebody else, but they have paid it on behalf of Mr. Deepak. That is what I will be explaining shortly. What is TDS and TCS? It is actually tax which is paid to the income tax department. It is paid on behalf of Mr. Deepak, but that is paid by somebody else. So 20,000 has already reached the income tax department on behalf of Deepak. 20,000 has already reached the income tax department. 70,000, it has not reached income tax department. Somebody should have paid it, but they have not paid. Okay, so Deepak should have paid 5,30,000 from his pocket. That is the tax liability that Deepak should bear now. 5,30,000 is the total amount which Deepak should pay now. Now, how should he pay that 5,30,000? That is his estimated tax liability. On or before 15th June, as I explained earlier, 15%, which is 79,500. Before 15th September, 45% is of 5,30,000, but already you have paid the first installment 79,500. Then you need to pay only 1,59,000. And 15th December, 75% less amount paid in earlier installment balance. And on 15th March, you have to pay the entire amount of 5,30,000, but again deduct the amount which is paid in the earlier installment. So balance 1,32,500. Very similar to the example which I had given you earlier, but the only thing was that there was a TDS and TCS, which we'll be now shortly discussing. What is this TDS and TCS? That is now my next topic. So I have completed problems from advanced tax. I am moving on to TDS. Before that, if there is any doubt from advanced tax, you may ask. Advanced tax, if there is any doubt, either you may unmute or you may type in the chat box. Any doubts from advanced tax?
No, ma'am. Perfect.
Yes, advance tax has to be paid even if you are paying tax under 115 BAC, the new provisions. If you fail to pay advance tax under, if you fail to pay advance tax under 115 BAC, you will be liable to pay interest. Right, Vishnu? There is no escape from paying advance tax. Whether you are going as per the new regime or the old regime. 115 BAC is called the new regime. Either you are in new regime or old regime, pay advance tax. If not paying advance tax, pay interest. All right. So now let me explain TDS. What will be the case when our estimate goes wrong? That is it. If your estimate goes wrong, that is if the advance tax paid is in short, that was what I was telling you. You have to pay interest on the shortfall. You have to pay an interest on the shortfall, and the interest which you have to pay is given under two sections, 234B and 234C. If time permits, I will explain all these with an example, but let me first explain TDS. Let me complete TDS and TCS at the end of the session. If there is any time, if you can wait for me, I can explain interest on interest under 234B and C. Right, Mr. PKM? Okay, so now let me explain. TDS. As we all know, this is short form for tax deducted at source. This is a short form for tax deducted at source. Now, how this operates, how this TDS operates. Let me tell you a simple example. Okay, earlier I had explained that this is also one item of prepaid taxes. Advanced tax, TDS and TCS. These are all, screen is not visible.
Ma'am, visible ആണ് അത് അവരുടെ എന്തെങ്കിലും ടെക്നിക്കൽ ഇഷ്യൂ ആയിരിക്കും മാം.
Okay. Right. TDS is one type of prepaid tax. Advanced tax was another. And now, what is the difference between advanced tax and TDS? That is what I'm explaining with this example. As I told you earlier, advanced tax is paid by SSC himself. He himself pays the advance tax. He himself pays the advance tax. That is, I will go to the income tax department direct and I will pay advance tax on the basis of my estimated tax liability. Now, how this TDS operates? Let's take Mr. A. Okay, Mr. A has to receive rupees 10,000 from, let us take Mr. Vishnu. He being the Sicasa secretary, let us take Mr. Vishnu in place of Mr. A. Mr. Vishnu, he has to receive 10,000 from ICAI on some services which he has made to ICAI. Vishnu has given some services. He has rendered some sort of services to ICAI. So ICAI will be now paying, ICAI Calicut branch will be paying 10,000 to Vishnu. Okay. When ICAI makes that payment, see, ICAI, we call them payer. ICAI is the payer and Vishnu is the payee. Vishnu is the payee, right? ICAI will not pay the entire amount of 10,000. They will not pay the entire amount of 10,000. They will deduct 10% and they will call that amount deducted as TDS. They will deduct 10%, which means they will deduct 10,000 and a check will be issued to Vishnu only for 9,000. See, all payments are not joint secretary, right? All payments are not subject to TDS. We have to see which are the various types of expenses on which we have to deduct TDS. But let me just assume that this is liable to TDS first of all. This is a transaction which is liable to TDS. This is a transaction which is liable to TDS. So 1,000 rupees TDS is deducted and Vishnu receives only 9,000. Now, let's take this ICAI. ICAI, after deducting TDS, what they will do with this 1,000? This 1,000, ICAI will pay to income tax department on behalf of Vishnu. On behalf of Vishnu, ICAI will go to the income tax department and they will remit this 1,000 to income tax department, but as if Vishnu is remitting it. Now, how can the income tax department remit an amount on behalf of some other person? With the help of what identity card? What is the ID card which the ICAI will be using here, or the ID number which the ICAI will be using here? Exactly, PAN card. Not TAN, it's not TAN, it is PAN card, permanent account number. See, all of us have an identity card anywhere. The ICAI has issued an ID card. The bank will give us an ID, customer ID. The same way, income tax department has also given us an ID, which is called as the PAN. That is our ID card with the income tax department. PAN card is my ID card with the income tax department. So Vishnu would have already given his PAN to ICAI. Vishnu should, Vishnu should. You should give your PAN to ICAI, or ICAI would ask Vishnu to give his PAN number. Vishnu would submit his PAN card. Copy of a photostat copy of the PAN card would have been given by Vishnu to ICAI, and ICAI would look into this PAN and they will remit this money, and they will write Vishnu's PAN number there. Just as we remit money to somebody else's bank account, is it not? We write their bank account number. Similarly, ICAI will go and remit this 1,000, and this 1,000 will now lie with the income tax department as if Vishnu has paid it. So this is going to Vishnu's credit. Vishnu can claim credit of this amount. Understood? Now, at the end of the year, so you might ask me, is this amount, is this TDS is not a loss for Vishnu? He's not getting that 1,000 rupee. So isn't that loss for Vishnu? Whether Vishnu would agree for this? Let me see. Vishnu is not actually incurring any losses. Let me explain that. Suppose he has many other income as well. He has many other income for 2020-21. Not only this 10,000 from ICAI, he is receiving so many other amounts, and his total income for the year is 7,50,000. His total income for the year is 7,50,000. This is his total income. Okay. 7,50,000 is total income, and let us just assume that when we calculate this tax slab calculation and all, his tax liability that came around, just assume 75,000. Just assume 75,000. This is his tax liability. Now, Vishnu need not go and pay 75,000 now. Vishnu need not go and pay 75,000 from his pocket, because already an amount of 1,000 has reached the income tax department by way of TDS. So he needs to take from his pocket only 74,000. He need to calculate his advance tax at 74,000. That is his advance tax liability. This is his actual tax liability. So that way, this will not result in a loss to the payee. Loss to the payee. We cannot call it a loss. TDS is never a loss. The recipient or the payee can always claim credit of that amount from his total tax liability. 1,000 can be deducted only from his total tax liability. It cannot be deducted from his income. If you ask me how much is Vishnu's income, here you have to include the full amount of 10,000 which is received from income tax department. The full amount of 10,000 is included in income, and 1,000 will be deducted from his tax liability. In other words, incomes are always grossed up. Income is always grossed up. Income shall be shown always at the gross amount. Gross amount meaning before deduction of TDS, and TDS can be deducted only from your tax liability, never from your income. So now, do you understand how this mechanism of TDS operates? How this mechanism of TDS operates? Do you get that? Any doubts from that? So far, what I have explained, if you have any doubt, you may ask me. Any doubt from this point which I have so far explained? What if he's not liable to tax? Very good question. What if Vishnu is not liable to pay tax? That is, Vishnu has only an income of, let us take 2,20,000, including the income received from ICAI. If Vishnu has an income of only 2,20,000, his total tax liability will be 0. Then Vishnu can claim a refund of the 1,000. He can claim a refund of 1,000 from income tax department. And how can he claim that refund? Come to our office. I will help you. That is what we are for. How can you claim that refund? Income tax department will give you back 1,000, but that requires some paperwork, and for that we are there to help you. Anything else from these points which we have so far discussed? All right. So, as I told you earlier, not all payments are subject to TDS. You need not deduct TDS on the entire payments whenever, whatever you are paying. What if he doesn't claim refund? It goes to the government fund. Government will be more than happy. Government will be more than happy. You will be called a good citizen. Right? If you have, if Vishnu doesn't bother about that 1,000, he need not. But if he wants that refund, come to my office and I'll charge you a fees as well, Vishnu. Right. TDS deducted by payer. TDS deducted by payer, but didn't pay. That you mean that Karthik? You mean in ICAI did not pay to the income tax department? Is it? Okay, if ICAI doesn't pay to the income tax department, then income tax department will take action against ICAI. TDS deducted and not paid is a that will attract huge penalty. Income tax department has got every right to attach ICAI's property and recover the taxes. Another thing, if ICAI doesn't pay and Vishnu is unaware of that, his estimated tax may go. Vishnu should be aware of this, that ICAI doesn't pay. See, that is what you are all doing in articleship period. We have a form called 26 AS. If you go to the income tax department and if we log in with our PAN card and all, there is something called as 26 AS. This 26 AS, see, Vishnu will have a 26 AS in income tax department. ICAI has to submit a lot of forms. ICAI have to submit a lot of forms, not just income tax return. They have to submit TDS returns. TDS returns as well to the income tax department. TDS returns mean this includes details of persons to whom payment is made. Albinando, I will not answer your question. Albinando, that you will come to know when you join articleship in any office. Before that, TDS return. TDS return, income tax, ICAI has to file a TDS return. TDS return means it is a statement which shows that how much I have paid to Vishnu, how much I have paid to Mr. B, how much I have paid to Mr. C, and what is the tax which is deducted on all these payments. We have to submit all these details to the income tax department. So after deducting TDS, if income tax, if ICAI fails to do the related paperwork, they'll have to face all the consequences. That was a question from Vishnu. Vishnu is unaware, then what will be the point? I hope I have answered your question. Then Karthik, how credit can be claimed then? TDS deducted but not paid, then you cannot claim the credit. That is why you have to always ensure that the persons with whom you are dealing with, they are genuine, they are also up to date in their work and all. You will lose that credit actually. That will be a loss. You have to keep on asking ICAI whether you have filed a return and all. Vishnu can say in advance tax, while computing the advance tax liability, you can claim a deduction of TDS. Advance tax is an amount which you have to pay from your pocket. See, 1,000 has already been deducted by ICAI, so I need not pay 1,000. So now while calculating my advance tax liability, I have to deduct TDS and TCS. Then Ajit, Vishnu can say in advance tax, I think I have answered that. Abbas, 26 AS is a form which shows who are the various persons and who all have deducted TDS from my payment. 26 AS is a statement which shows who all have deducted TDS. ICAI would have deducted TDS when they are making payment. Lakshya would have deducted TDS when they are making payment. III would have deducted TDS making payment. Many of my clients would have deducted TDS on making payment. So all this will come in a comprehensive statement and a single statement, and all this will together show what is my total income and what is my total TDS credit, because every one of them will be filing their TDS return. See, ICAI will be filing a TDS return. Lakshya will be filing a TDS return showing that this much has been paid. III will be filing a TDS return. So everything comes to the knowledge of income tax department, and income tax department will now tabulate. and that will they will sort it person wise, SSC wise. How much is total TDS deducted for me? How much is total TDS deducted for Mr. B? How much is total deducted for Mr. C? Everything can be seen in a single statement. That is my Form 26AX. Ashik, refund in case of 194E for non-residents. Non-residents can also come and file return of income, and they can claim a refund. Why ICAI collect TDS from Vishnu? That is compulsory. Now, another question. Why should this TDS mechanism, why is this TDS mechanism introduced? Why is this TDS mechanism introduced? Why should there be something called as TDS? See, there are two reasons why TDS mechanism has been introduced. One is pay taxes as and when you earn income. Pay taxes as and when you earn income. The moment Vishnu is getting 10,000, tax upon that should reach income tax department. Income tax department will not wait till 31st July of the next year. Pay taxes as and when you earn income. Vishnu is getting 10,000, the tax relating to that 10,000 should also reach the income tax department. That is question number one. That is answer number one. Why TDS has been introduced. Second point, prevent the most important thing, black money. Black money. Once ICAI deducts TDS, once ICAI deducts TDS, as I told you earlier, ICAI has to file a TDS return. I explained that. And in TDS return, ICAI is making a declaration that I have paid 10,000 to Vishnu. That is a declaration which they are making. That is a declaration which they are making in TDS return. So later on, Vishnu cannot say that. Vishnu cannot say that ICAI did not give me money. No, he cannot say that because ICAI is going to income tax department and making a declaration. See, we have paid 10,000 to Vishnu. This is the tax amount 1,000. So Vishnu has to always include 10,000 in his total income. He cannot exclude 10,000 from his total income. That is one important aspect for introducing TDS that prevents black money. Once TDS has been deducted, none of us can say that we have not received money. Understood, Neelan? So that is why this TDS mechanism has been introduced. Pay taxes the moment you earn income, and subsequently you cannot say that I have not received the money. Because the payer himself is declaring, I have paid so much to Vishnu. This is a PAN number. Everything has been disclosed to income tax department. Okay. So I think, shall we proceed now to the various types of incomes on which TDS is deducted? See, all incomes are not subject to TDS deduction. Not all incomes are subject to TDS deduction. Only certain types of payments are subject to TDS deduction. We have listed those items under section 192 to section 194O. 192 to section 194O is the various sections under which the requirements for TDS have been listed out. Right? These are the sections which govern TDS deduction, the various types of incomes or expenses which are subject to tax deduction. So, Vishnu, if I have to share this file here, what can be done?
Yes, ma'am.
How can I attach a file to this presentation so that you can all have it for your future reference? How to attach a file here?
Ma'am, just a minute. Ma'am, if it's okay,
You have a group here for this?
Yeah, ma'am. Having a group.
Okay. Then I will send to the group. You can share it in the group, right?
Okay, ma'am.
Okay. I thought once the session is over, you will all be dispersed. No, you have a group for this.
Yes, ma'am. Or we will send it as through mail.
Okay, right. So, So I have tried to make it as simple as possible. The TDS, I have made a tabular presentation. I have made a tabular presentation of the various sections on which TDS is to be deducted. If you see the column headings, this is a section under which TDS is to be deducted. Second one is payer, that is who has to deduct TDS. Who has to deduct TDS, that is the second section, second column. Third column is the recipient, who is receiving it. That is payer and recipient, payer and payee. These are the two persons who are subject to tax deductions. So who will be the payer, who will be the payee? The next column is what is the nature of payment. This is one important column which we have to look into. Only if your payment falls within this group, only the payment which you are making falls under this group, TDS has to be deducted. Now, when should TDS be deducted? Time. See, I am first making an what do you call liability entry. I am passing an entry for liability. Whether Vishnu can say, no, Neelan, I can't start with TCS right now. I have to complete TDS. Whether Vishnu can say to ICAI for non-deduction, I will answer that in this table. Then time of deduction of TDS is generally TDS has to be deducted at the time of, but I'll be making a liability in my books of accounts. Like when Vishnu has done that services for ICAI, ICAI would be recording a journal entry, expense account debtor to Vishnu. Okay. When the service has been completed, they'll be recording a liability entry, expense account debtor to Vishnu. And when payment is made, they'll record the next entry, Vishnu account debtor to bank. Do you understand? So the two entries, like outstanding entry I recorded, expense account debtor to Vishnu was recorded on 15th April, and the payment entry was recorded on 15th September. Vishnu to bank was recorded on 15th September. When should I deduct TDS? Is it in April or is it in September? That is another thing which we have to look into. That is it at the time of credit? Is it at the time of credit or is it at the time of payment? Is it at the time of payment? Credit or payment? That is another question which we have to look into. Okay, we'll answer all those questions. Then rate, limit is another question. Rate of TDS is another question. And last point is whether you can apply for non-deduction. As Ajit asked me earlier, is there any option wherein Vishnu can say to ICAI, please don't deduct TDS? Is there any option? We'll explain all these things. So these are the various questions we'll be answering. What type of payment is liable for tax deduction? Which section is that covered by? Payer and payee. When is TDS to be deducted? What is the limit? What is the rate? And is there any option for non-deduction of taxes? Again, I will explain all these with problems. So we will complete problems as well as questions simultaneously. So I will read a particular question and I will go to the related section. Yes. Examine and explain TDS implications in the following cases with reasons. So you have to see whether TDS is to be deducted. You also have to assume that all of them are residents and they are also having a PAN number. Okay, they are also having a PAN number. Question, you want it now? Can you see it? Can you see this question? No, every time I have to share the screen. Every time I have to share the screen. I thought the screen was already shared. Screen was already shared. Can you see it? Okay, you are seeing only the table. Anyway, I'll share the question. Screen is already shared, I think. It is of that table, right? Can you see it now? Right. Examine and explain TDS implications in the following cases with reasons thereof, assuming that the deductees are residents and having a PAN which they have duly furnished. So they have a PAN and they are the residents. Sarala received a sum of 92,000 on 30th September towards maturity proceeds of LIC. So there is an LIC policy which is matured. Okay, and Sarala is receiving now 92,000 from the LIC, life insurance company. Actually, the policy amount was for 80,000, and every year Sarala had paid an annual premium of 10,000. So right from 2014, 2015, 2016, 2017, 2018, 2019, 6 years she would have paid an amount of 10,000. Do you get that? 6 years, 14, 15, 16, 17, 18, 19. 20 shouldn't pay because the due date is 1st October and the policy matured on 30th September. So on 1st October 2020, you are not paying it. 10,000 into 6, 10,000 into 6, you have paid 60,000 premium to the LIC, and now LIC is paying you 92,000. Did you understand the question? I'll come to the answer. Did you understand the question? Sarala had paid 10,000 to income tax department, to insurance company, 10,000 to insurance company. They had paid 6 installments. 10,000 into 6 will come to 60,000. And now she is receiving 92,000. Although the policy was for 80,000, we know that there is something called as bonus and all. If you have studied insurance company final accounts, there is something called as bonus and all. So everything added together, now she received 92,000 from the insurance company. The question is whether the insurance company has to deduct TDS. Again, let me come to that table. The provisions regarding LIC maturity proceeds, they are governed by section 194A. They are governed by section 194A, 194DA. This is a section which governs LIC policy proceeds. Now let me read this section. Let us understand by reading this section. So the section which covers this is section 194DA. Now who is the payer here? Any person who is making payment of life insurance policy. It's not just LIC, it can be the private insurers as well, like ICICI, so many other private players in the market. So it can be ICICI and some other persons. Then you are making a payment to a resident. See, resident. Now, understand one important point. Many persons, when they read this table, what they understand is that only if you're making payment to a resident, you need to deduct TDS. Absolutely wrong. Even if you're making payment to a non-resident, that is subject to tax deduction, but not under 194DA, it is under section 195. 195 is that section which completely deals with NRI payments. 195, and 195 is not there in your syllabus. Only that. 195 is not there in your syllabus. When you read this section, don't feel that NRI payments are not subject to tax deduction. NRIs are also subject to tax deduction, but not under this section, some other section. 194DA covers only payment to residents. NRI payments are covered by section 195, which is not there for an intermediate syllabus. Okay. What is the type of payment which we are making here? It is life insurance policy amount. Life insurance policy amount. But let me tell you one thing. I don't know if you remember all these sections. Section 1010D, there is a section which says that amount received from an insurance company is exempt. Amount received from an insurance company is exempt. There is a section which says that 1010D gives exemption to certain types of insurance policies. But if it is not exempt under 1010D, please go and read when can you claim exemption and when it is not exempt. Please read 1010D related to this. I think I don't have time to explain all 1010D and all. So if section 10, we all know that that covers the exemptions, is it not? Section 10 covers all the exemptions. So if the income is exempt under 10, then you need not deduct TDS. Okay, TDS applies only if income is not exempt under 10. If income is exempt under 10, there is no TDS. If it is not exempt under 10, then of course, life insurance policy amount is taxable. At what time TDS is to be deducted? At the time of payment. See the earlier example which I had told you, I was talking about Vishnu's case where the where ICAI had created the credit on 15th April and made the payment on 15th September. In this case, insurance company has to make the payment only on 15th September. So 15th September, when they make payment to Vishnu, LIC would pass the entry, Vishnu account debtor to bank to TDS payable. They have to record this journal entry on 15th September, only at the time of payment. 15th April, when they are creating a liability in the books of accounts, there is no need to deduct TDS. TDS has to be deducted only in September, not in April. So that was the next column. Then next item. Next item. So at the time of payment, when should TDS be deducted? Only the payment. What is the limit? Limit is that is a payment the insurance company is making is 1 lakh and above. 1 lakh and above. Only the amount which is paid. Could you please explain what was that? I didn't understand your question. That point once more. Okay. Insurance company would have recorded an entry for liability. That is, when the money becomes due for payment, they will record an entry for liability. Is it not? Whenever money becomes due, you will pass an entry for the liability, and the liability entry is expense account debtor to Vishnu. Is it not? And actually, they are disbursing the amount only in September. They are paying it only in September. When should TDS be deducted? Whether it has to be deducted in April or in September. In this case, it has to be deducted only in September. Is that understood? Porinju Elliot? In this case, in case of LIC payments, the liability for tax deduction will be at the time of payment. Liability for tax deduction will be at the time of payment. Not in April when you create a liability. Is that understood? Okay. Now, next point was that what is the limit? When should TDS be deducted? TDS be deducted only if the amount which you are paying is, that is LIC. LIC is making a payment of 1 lakh and above. For payments below 1 lakh, there is no liability. For payments below 1 lakh, there is no liability for tax deduction. And what is the rate at which TDS is to be deducted? What is the rate? Rate is 5% of amount paid minus premium. See, what is my profit? What is the profit which is earned by the person? Here we are paying tax only on our profit. Profit means amount received minus expense. LIC is paying me 92,000. I have already paid an insurance premium of 60,000. So my profit is 92 minus 60. Okay, my profit is 92 minus 60. LIC is paying me a proceed of LIC is giving me an amount of 92,000. I have already paid an insurance policy of 60,000. So my profit is 32. 32 into 5% will be the rate of TDS. That is the amount which they have to deduct. Now, whether you can at any point of time, you can tell LIC, please give me the amount without deducting TDS. Yes, there are two options. if you want to get payment from LIC without deduction of TDS, if you want to get payment from LIC without deduction of TDS, there are two options. Somebody earlier asked me whether Vishnu can tell ICAI, please don't deduct TDS. Please don't deduct TDS. There are two options. One is you make an application in form number 13 to the income tax officer. Vishnu, you make an application to the income tax officer. Vishnu, make an application to the income tax officer telling that there are some difficulties. Please, sir, please tell the ICAI not to deduct TDS. And if the income tax officer sees that this is a genuine case, what Vishnu is saying is absolutely right, he is facing some difficulties, then the income tax officer will issue a certificate to ICAI telling that please don't deduct TDS, no tax deduction certificate. No tax deduction certificate. So that for that, Vishnu has to make an application in form number 13. Vishnu has to make an application in form number 13, okay, to the income tax officer for non-deduction of tax. Vishnu has to make an application in form number 13, but that's not easy. You have to go and convince assessing officer. You have to fall at his feet. You are at his mercy. Please, you have to keep on telling to the assessing officer, and the assessing officer, if he agrees to that, he will issue a non-tax deduction. Second condition is, so this is an application which is made, and after that, the department has to look into. Next is, Vishnu can make a self-declaration form. And that self-declaration form is 15G. 15G is the self-declaration form. Vishnu himself is making a declaration that my income is less than basic exemption limit. See, my income is less than 2,50,000. I agree that you are giving me 92,000, but I don't have any other income. My income is only this 92,000. On this 92,000, there is no tax liability. So Vishnu himself is declaring, and this declaration form he is giving direct to the LIC. So these are the two options wherein you can get this amount without tax deduction. Do you understand? Which are the two sections? Either you go and meet the assessing officer, and assessing officer will decide the rest, or Vishnu himself making a declaration. But keep in mind, Vishnu, that should be a genuine declaration. Never give a false declaration. Never give a false declaration. If you're sure that your income is less than 2,50,000, you can make a declaration to LIC. What is the point in deducting TDS? If you deduct TDS, tomorrow I will go and claim the refund. So what is the point in deducting TDS? So you give a self-declaration form that my income is less than basic exemption limit. So please don't deduct TDS. And the self-declaration form is in 15G. And if you are a senior citizen, you have to make it in 15H. A senior citizen has to make it in 15H. So these are the two ways where you can get an amount without deduction, non-deduction of TDS. Is this clear? Is this understood? Is this understood? Ajit, you had asked me this doubt earlier. I hope I have made that clear. Okay, now we'll come to this section. Now we will come to this point. Here, in order to get this lower tax deduction, what is the way out? In order to get this deduction, there are two options. Either you can make an application form number 13, or we can make a self-declaration form. Both are possible. See, certain sections, we'll see that only either form 13 is available. In certain other sections, we can see that only 15G is available. In certain sections, we can see that both are available. In certain sections, we can see that none is available. It's all different sections call for different things. So once I have explained one section, I think all other sections I can explain fast, because only this person, resident, those things change. So did you understand this section now clearly? Other sections I can go fast because it's similar. All sections are similar, only the limit of the rate changes. Anything in 194DA which I have to explain further? Anything in 194DA which I have to explain further? It's any person, meaning a life insurance policy amount is paid by any person. If there is any exemption, there is no need to deduct TDS. You are making a payment to resident, then we are making a payment to a resident. TDS has to be deducted at the time of TDS has to be deducted at the time of payment. I explain what is that. Either you are making a liability or you are making a payment. When should be a TDS deducted? At the time of payment. Only for payments above 1 lakh and above. 5% of amount paid minus premium paid. And if you want to get a lower tax deduction, either you can make an application form number 13 to the assessing officer, to the income tax officer, or you can make yourself a self-declaration form. But always give RK, I will answer your question. Is it not 15H is not the section. 15H is 15G or 15H is a form number in which you are making the declaration. Right? Right. Now we'll come to the answer. We'll answer this question now. So I think I have made this clear, and now we'll answer this question. So in this question, Sarala received a sum of 92,000 towards maturity proceeds. Let us see what is the answer. Let us see what is the answer. 1010D. It was regarding that annual premium exceeds 10%. Do you know this rule? Do you know this rule? If a policy is taken after 1/4/2012, if a policy is taken after 1/4/2012 and the amount of premium which is paid exceeds 10% of sum assured, Veena, happy life insurance company can claim 194DA. Yes, that is true. Veena, 1010D, all life insurance policy incomes are not exempt. That is what I am explaining now. If the amount of premium which you are paying on an insurance policy is more than 10% of sum assured, then that policy is, the maturity proceeds received is taxable. Of course, if it is received on death, then that is exempt. Otherwise, that is taxable. The policy is taken after 1/4/2012 and the amount of premium paid is more than 10% of sum assured. See, here premium paid is 10,000, sum assured is 80,000. So 80,000 into 10% will come to 8,000. 80% of 10% will come to 8,000. So this policy amount is taxable. Is that understood, Veena? That is what is explained in section 1010D. All insurance policies are not exempt under 1010D. There are certain exceptions. If the policy is taken before 1/4/2012, 20% of sum assured can be paid. 20%. Now, 15G, if his income is about 2,50,000, I would advise you no. Nimya, it is not advisable. It is not advisable to give a 15G if your taxable income is about 2,50,000. Okay. So Veena, I hope 1010D exceptions. Please go and read that. So that is covered by section 1010D. Annual premium exceeds 10% of sum assured, and hence this maturity proceeds would not be exempt under 1010D. It is not exempt. It is taxable in the hands of Ms. Sarala. However, tax deduction is not attracted since the maturity proceeds are less than 1 lakh. There is no need for tax deduction as the maturity proceeds is less than 1 lakh. Okay. So I'll go to the next question. Mr. Rohit transferred a residential house property to Mr. Arun for 45 lakhs. Stamp duty value of the property is 55 lakhs. There is a transfer of residential property. There is a sale of immovable property. Which section is that covered by? Let's again take that. Let's take that table. Yes, 194 IA. 194 IA is the section. 194 IA. Any person who is the payer, any person who is the payee, resident. So you are giving payment to a resident. It is a sale of immovable property, but it's not a rural agricultural land. It's not a rural agricultural land. We know that rural agricultural land is not a capital asset, so there is no capital gain. So there is no need for tax deduction. At what time TDS is to be deducted? Payment or credit, whichever is earlier, whichever is earlier. What is the amount which is covered? 50 lakhs. The amount which you are paying shall be 50 lakhs or more. Amount which you are paying shall be 50 lakhs or more. Rate of TDS is 1%. And if you want to get a lower tax deduction, there is no form number 13. There is no 15G. That is not possible here. That is not possible. Form 13, form 15G, there is no option to make such payments. So in this question, my answer would be that, what would be your answer? Whether you have to deduct TDS here. Are you making a payment of more than 50 lakhs? No, you are making a payment of only 45 lakhs. The amount which you are paying shall be more than 50 lakhs. Consideration, it's not SDV. 50 lakhs is the amount, money which you are paying. You are paying only 45. Okay. Right. So that is over. Next one is professional fees. Professional fees and also royalty. Let's read that section. (194J) is the section which covers professional fees or royalty. 194J. Let us see. Who is required to deduct TDS? Any person. Any person. But there is an exception. Individual or HUF need not deduct TDS. Individual or HUF. The exception is only given to individual or HUF. If the turnover in your earlier, just preceding financial year does not exceed 1 crore or 50 lakhs. Let's take an example. See, my payments, my audit fee, all these payments are covered under the section 194J. I am auditing for a sole proprietor, for an individual. Let us take, I am auditing for Mr. B. Okay. I am auditing for Mr. B. Mr. B is an individual and his turnover in the last year was less than 1 crore. He's a businessman, so 1 crore. If he's a professional, then what we look into is 50 lakhs. He's a businessman and his turnover for the last year is 1 crore. He is giving me audit fees. He need not deduct TDS. Because TDS shall be deducted only if your turnover is more than 1 crore or 50 lakhs in the last financial year, in the preceding financial year, not in the current year. Because current year, I will never know whether I'm going to cross 1 crore or 50 lakhs. So always we keep the limit to the earlier year. Okay. Then, whom you are making payment to a resident. But there is no TDS if the payment is made for personal purpose. Personal purpose payments are not covered under this section. Now, what are the type of payments which are covered here? What we are covering here is professional fee, technical fee, royalty, non-competence fee, and sitting fee to directors. When should TDS be deducted? Earlier of payment or credit. What is the limit? 30,000 is the limit. That is, if the audit fee which is paid to me crosses 30,000, then TDS has to be deducted. But sitting fees, there is no limit. Sitting fee, there is no limit, meaning however small the amount is, TDS has to be deducted. What is the rate? 10%. 2% if the payee is call center, royalty for cinematographic films and for technical fee. And for lower tax deduction, we have to make an application form number 13. See, 30,000 limit can be applied separately for professional fee, separately for technical fee, separately for royalty, separately for non-competency fee. It's not like, Mr. A, I'm paying professional fee and technical fee. not professional fee 10,000 and technical fee 35,000. For each item, I can apply the limit of 30,000. See, so this is section 194J. I will repeat section 194J. Who is covered by this? Any person, but there is an exception. Individual or HUF, no tax deduction if your turnover is less than 1 crore or 50 lakh in the last year. Mr. B's turnover in the last year was less than 1 crore. When he gives me audit fee, he need not deduct TDS. But if Mr. B's turnover in the last year was more than 1 crore, when he gives me payment, he has to deduct TDS if the audit fee is more than 30,000. Only if the audit fee is more than 30,000, you need to deduct TDS. Otherwise, there is no need for requirement of TDS. And if it is a professional, it is not 1 crore. What we look is 50 lakhs. Okay. And if it is a company or a partnership firm who is making me payment, whatever be the turnover in the last year, always TDS is to be deducted. Any doubt in this? Any doubt? Credit means I am making a liability. I am making a liability in my books of accounts. I am passing an entry for payable. Audit fee account debtor to audit fee payable. Audit fee payable account debtor to cash. Credit means that entry for liability. I hope that is clear, Mr. Aniyan Unni. No, somebody else had asked that. Okay, so let us come to this question. Let us come to this question. Can you see the MCQ now? Is my screen sharing paused for some reason? Can you see it now? Okay. Akash Private Limited pays the following amounts to Santosh: 22,000 towards professional services and 18,000 towards royalty. Mr. Santosh is receiving two payments: 22,000 professional fee, 18,000 royalty. Both added, it comes to 40,000. Is this liable for tax deduction? Is this liable for tax deduction? Yes or no? Is this liable for tax deduction? 22,000 professional fee, and no, as I told you earlier, the limit of 30 can be applied separately for professional fees and royalty. The limit of 30 can be separately applied for professional fees and royalty, so there is no need for tax deduction. I hope this is clear. This is very much clear. This should be understood. The limit of 30,000 can be applied separately for professional fee, technical fee, royalty, non-competence fee. Sitting fee, of course, there is no limit. Sitting fee, of course, there is no limit. Then, next item. Payment of 1,75,000 for purchase of bag according to specifications of Messrs. Packaging Limited. However, no material was supplied. Okay. Again, let us go to that table. It is 194C, the most important item. 194C. Let us see the section. Who is liable to tax deduction? Specified person. Specified person, I have mentioned in note. Who is a specified person? So we'll come to the note below, 194C. What does that note say? Note 4. What was that note? Specified person means almost everybody is a specified person. Almost everybody is a specified person. I tell you, the only exception is for that individual or HUF, central government, state government, local authority, corporation, anybody is a specified person. The only exception is for that individual or HUF who is not subject to 1 crore 50 lakh in the earlier financial year. Individual or HUF, if he is not covered by that limit, then he need not deduct TDS. Almost the same thing. Then, whom you are making payment to? A resident contractor. And again, if you're making payment for a personal purpose, there is no need for tax deduction. Personal purpose. See, I have a party at home. I have party at home, and I'm making payment to a contractor, the caterer who comes to my place. Then there is no need for tax deduction because it is my personal purpose. But the same party, if I'm conducting in my office, then I have to deduct TDS. Okay. Works contract. I'll explain what is works contract. Works contract is defined below in a note. When should TDS be deducted? Earlier of payment or credit. When, what is the limit? Single payment does not exceed 30. Aggregate payment exceeds 1 lakh. I'll explain that. Rate is 1% for individual and 2% for others. 1% for individual HUF, 2% for others. And if you want to get a lower tax deduction, you have to make an application in form number 13. You have to make an application form number 13. So let me explain. What does this limit mean? Single transaction 30 and aggregate 1 lakh. Single 30, aggregate 1 lakh. What does this mean? See, I'm making a payment. I'm making a payment to Mr. A. I'm making a payment to Mr. A. And the payment is made. In June, I'm making him a payment of 20,000. In August, I'm making him a payment of, I'm making him a payment of 25,000. And in December, I paid him 20,000 again. 20,000 again. See, individual payment does not exceed 30,000. And if you take together, then it comes to only 65,000. There is no need for tax deduction. Tax deduction is required either when the individual payment crosses 30,000 or aggregate payment crosses 1 lakh. Same example, if the payment had been like this, 35,000 and 30,000, these were the two payments which I had made. In this case, TDS has to be deducted. Okay. If you want to claim exemption from TDS deduction, two conditions. Single payment should not go above 30 and total payment should not go above 1 lakh. Single payment shall not go above 30 and total payment shall not go above 1 lakh. Now I have to explain in this case, what is a works contract? What is a works contract? Because what we cover here is a works contract under 194C, and I have explained 194C below in this table. What is 194C? Works contract. Work means advertising, broadcasting, carriage of goods and passengers like freight, catering, manufacturing or supplying a product according to the requirement or specification of the customer using material purchased from such customer. This is important. See, this line is important. This is what is being asked in that question. These are all called as works contract. Advertising, broadcasting, carriage, catering. See, it is an ABC. It's easy to remember. A, advertising, B, broadcasting, C, carriage, C, catering, and manufacturing or supplying a product according to the requirement or specification of a customer using material purchased from such customer. Let me put it in simple terms. I am a tailor. See, I am a tailor. You are giving me material for stitching and you are giving me a specification, a pattern, how to stitch it. This is a works contract. You are giving me material, and on the basis of the material which you have given me, I am manufacturing a product. This is works contract. But if I am running a ready-made shop, that is not works contract. That is the easiest example to understand this section. Okay, tailoring is works contract. Tailoring, because you are supplying me the product according to your specification, I'm stitching you a dress. That is a works contract. Understood? And if you are giving me, I will explain. Shruti, I will explain all this. What if tax is deducted and it's actually not required? No problem. The other person can enjoy the credit. So manufacturing or supplying a product according to the requirement or specification of the customer using the material purchased from such customer. Now let me come to this question. Payment of 1,75,000 to Ankit for purchase of bag According to specifications of Messrs Packaging Limited, according to specification. So I am purchasing a bag. You are given me the specification, but no material was supplied for such bag. No material was supplied. Tailoring, you are supplying the material, that is a works contract. Since material is not supplied, this is not works contract. Since material is not supplied, this is not works contract. Is it understood? Is it understood this point? All right. Now, what about point number 5? ABC pays 12,000 to Deepika for towards sitting fee, whether TDS is to be deducted. 12,000 to Deepika, sitting fee, whether any limit is applicable. 194J is the section under which this is applicable. There was a limit of 30,000, but here I had told you specifically that there is no limit for sitting fee. There is no limit for sitting fee, so you have to deduct TDS. You have to deduct TDS. Okay. Now, again 194J, Rashi is engaged by Jiga for the business of call center. Total amount is 70,000 regarding services of call center. Whether TDS is deductible. Call center. Call center again comes under section 194J. Call center again comes under section 194J. Call center again comes under section 194J. What is that? Yes, call center. 2% call center. It comes under 194J. Limit is 30,000. So TDS is deductible. Since many students have been asking this, let me explain one thing. See, let me explain this paragraph. Many students have been asking this. Many students. During this COVID pandemic, if TDS is deducted, that means we have no money in our hands. The money which is coming to our hands, it is decreased if TDS is deducted. So in order to give relief during this time of pandemic, the rate of TDS under these sections, 193, 194, 194A, 194C, I have given the list of various sections here. Under all these sections, the rate of TDS has been reduced by 25%. The rate of TDS has been reduced by 25%. What does that mean? If rate of TDS is 10%, you need to deduct only 7.5%. The rate of TDS is given in the table is 5%, then you need to deduct only 3.75%. Only for payments which are made between these two dates, 14/5/20 and 31st March 21. Okay, I have mentioned the sections which are covered by this special rule. If it is 1%, now we need to deduct only 0.75%. So this was a COVID pandemic relief which was given. Many students had been asking that, so that is why I explained this. Okay, certain sections are not there. Certain sections are not there. All right. Only those sections which are mentioned here. Only these sections. No other section you can claim that reduction of 25%. No other section. Okay. Now, lottery. Lottery 1 is 21,000. Lucky draw, which means lottery. Under which section this TDS has to be deducted? Let us go to that section again. Lottery are covered by section 194B. Any person. It can be non-resident or any person. Gambling income, which means lottery is covered here. Payment at the time of payment. Payment or credit, whichever is earlier. Here it is payment. Limit 10,000. More than 10,000. 30% is the rate of TDS, and there is no way to get a lower tax deduction. 194BB covers horse races. That is also the limit is same. 194B and 194BB are very much similar. 194B and 194BB are similar. Okay, so that section is also over. Let me ask you one question. In this case, 21,000 is the rate of tax deduction. 21,000 is the rate of tax deduction. 21,000 is the amount of lottery won. Whether we have to deduct TDS on 21,000 or only on the amount in excess of 10,000. Whether we have to deduct TDS on 21,000 or the amount in excess of 10,000. Yes. Once the limit crosses that amount which is mentioned in the table, then you have to deduct TDS on the entire 21, unless of course there are certain sections where it is given specifically. Generally, we have to deduct on the full amount. Okay, Ajit's doubt, in case of 194C, aggregate limit crossed at the end of financial year, whether we would deduct on the entire amount. I think I have answered that question, Ajit, just now. Once the limit crosses that limit which is given in the section, then we have to deduct TDS on the entire amount. We have to deduct TDS on the entire amount. I'll give you an example, Ajit. I'll give you an example. Let's take June. I have paid you 25,000. Then September I have paid you 20,000. So there was no need for tax deduction. December I had paid you 45,000. See, now it is liable for tax deduction. Now this is liable for tax deduction. So what I would do is I would add all these. I would add all these, which means 45 plus 20 plus 25. How much will that come to? 45 plus 45, 90,000, and 90,000 into 0.75%. 90,000 into 0.75. In this, now we have to look into 0.75, is it not? During this COVID pandemic, between May and March, we have to deduct this. So 90,000 into 0.75 will be the answer. Ajit, is this understood, Ajit? Adira, the doubt which you asked, once the amount crosses 1 lakh, the amount which is deductible, the amount on which TDS is deductible is amount paid by insurance company minus premium paid. That is, 1,50,000 is paid by insurance company, 1,50,000 minus premium paid. That is the amount on which TDS will be deducted. Okay. I hope I have explained Adira's question as well. Now, question number 4 is over. Question number 5. Question number 5, a similar question. Kunal received a sum of 10,20,000 on 28/2/2021 from Employees Provident Fund Scheme before continuous service of 5 years on account of termination or employment due to ill health. Do you remember that PF related things which we had discussed in salary? The lump sum which is received from a provident fund is taxable. Generally, lump sum received from a provident fund is exempt. Generally, it is exempt, but it is taxable if you have not rendered 5 years of continuous service. If you have not rendered 5 years of continuous service. I hope you had discussed this in the chapter salary. What if the last payment, you will not make any payment then? You will not make any payment at that time, PKM. No payment made. Okay, salary, we have generally told that amount which is received from a provident fund at the time of maturity is exempt, at the time of retirement is exempt. But if you have not rendered continuous service of 5 years, if you have not rendered continuous service of 5 years with that employer, then the amount received from a provident fund will be taxable. Salary, first chapter. Then same chapter, same point, there was an exception. But if you could not render 5 years of service because of reasons beyond your control, you could not render 5 years service because of ill health, because of death, reasons beyond your control, then that amount received will be exempt. So generally there should be 5 years service. Then the amount received from PF is exempt. There is no need for tax deduction. But if you could not render 5 years service, then that is taxable. TDS has to be deducted. Understood? 5 years service has been rendered. PF amount is exempt. No TDS. If you could not render 5 years service, taxable. TDS is deducted. But you could not render 5 years because of reasons beyond your control. It was not my fault that I couldn't give 5-year service. It was due to my ill health or because the employee died. In that case also the amount is exempt and there is no TDS. So that is the answer which I have to give here. Here there is a premature withdrawal from the employee's provident scheme. There is no 5-year service, but the reason is not your fault. It is not on account of your fault. It is due to ill health. So this is exempt, and there is no need for tax deduction. There is no need for tax deduction. These things are given in your table as well. Section 192A. 192A. Trustee of EPF. Trustee of EPF. Trustee of EPF is the person who is making the payment. The payment is made to an employee. Premature withdrawal from RPF. 50,000 and above is subject to tax deduction. 10% is the rate of tax deduction. But of course, since it is not on account of your fault, there is no tax deduction required. Okay. Now, next section. Indian Bank sanctioned and disbursed a loan of 12 crore to B Limited. And B Limited paid a service fee of 1,20,000. Service fee. Let us read out the answer. Service fee falls within the definition of interest. Service fee falls within definition of interest. So that will be subject to tax deduction. Now let us go to the relevant section for tax deduction. Let us go to the relevant section for tax deduction. Interest is covered by 194A. Interest is covered by 194A. 194A, any person paying interest has to deduct TDS, but there is of course an exception. Individual or HUF, if your turnover in the last year does not cross 1 crore or 50 lakhs. You are making a payment to resident. The nature of payment is interest other than interest on securities. Earlier of payment or credit, that is the time in which the rate of TDS is to be deducted. Then rate is 10%. Limit is, if it is a bank, cooperative bank or post office, it is 40,000. And if it is others, other than bank, cooperative bank, it is 5,000. Rate is 10%. And if you want to get a lower tax deduction, you can either make an application form number 13 or 15G. But let me come to this note below, note 4. What does this note 4 say? Note 4, what does that say? Now, note 4 says that no TDS is required under 194A in the following cases. See, if it is paid to bank, if you are paying interest to a bank, then there is no need for tax deduction. In this case, you are making a payment to a bank, is it not? So there is no tax deduction. Interest paid by firm to its partners, a partnership firm paying interest to its partners, there is no need for tax deduction. Interest which is paid by firm to its partners, there is no need for tax deduction. In this example which we are discussing right now, the interest is being paid by a bank. Paid by a bank. Paid to a bank, is it not? Paid to a bank. What does it say? If you're making payment to a bank, there is no need for tax deduction. So there is no requirement here. And point number 3, I will explain, because now what I have to explain is certain new amendments which have been introduced from this year onwards. Let me explain those sections, the amendments which have come up from this assessment year onwards. We will discuss that sections, and if the time, it is 4 o'clock now, if time permits, we will discuss the old sections. Okay. We'll discuss the old sections if time permits. So the first section which I have to explain is 194N. Please listen carefully. This is an amendment. Generally, you can expect a question from amendments. Amendments are generally asked. Okay, so what is that amendment? Section 194N is the new section which has come out from this year onwards. Let us see what is that section. 194N. 194N. Who is the payer? Bank, cooperative bank, or post office? So the bank, cooperative bank, or post office is paying you money. It is paying you money. Understood? payment is made to any person. You are withdrawing 1 crore, more than 1 crore from one or more of your bank accounts. You are withdrawing one or more than 1 crore from your bank accounts, and that can be your current account, savings account, whatever. The limit is applicable, 1 crore limit is applicable per bank. See, I am withdrawing 80 lakhs from South Indian Bank and another 50 lakhs from Dhanalakshmi Bank or State Bank of India. This is not applicable. 194N is not applicable. The limit is applicable per bank. 1 crore limit is applicable per bank. At what time TDS is to be deducted? At the time of payment. In this case, TDS is to be deducted only on the amount in excess of 1 crore. What does that mean? If you are withdrawing 1 crore 20 lakh, if you are withdrawing 1 crore 20 lakh from the bank account, TDS has to be deducted only on 20 lakhs. Only on 20 lakhs. What is the rate at which TDS is to be deducted? 2%. Right? There is a note which we have to look into here. We'll see that. What is that note attached to that? Note 6. Then, when this section is not applicable, if the bank is making payment to government, say bank is making payment to income tax department, this section is not applicable. One bank is making payment to another bank, this section is not applicable. One bank is making payment to cooperative bank, this section is not applicable. One bank is making payment to ATM operator, this section is not applicable. Understood? This is a new section. I have been seeing questions on this section in your RTPs and the MTPs and the MCQs. So did you understand what is section 194N? Bank or cooperative bank or post office is making payment to any person, but you are withdrawing more than 1 crore from your own account. You have your SB account, but you are withdrawing it in cash. See, withdrawing it in cash. Only if you are withdrawing it in cash, this rule is applicable. Withdrawal in cash, I have to add that. Withdrawal in cash exceeding 1 crore from one or more of your bank accounts. At the time of payment, the TDS is to be deducted only on amount in excess of 1 crore. Rate is 2%. Rate is 2%. Now, what is at note number 6? What is at note number 6? If you have not filed return of income, if you have not filed return of income for all the 3 assessment years, relevant to the previous year in which time limit for filing return has expired. See, 2020-21, the time limit for filing return has not expired. 2020-21 financial year, the time limit has not expired. We have time up to July, and the July date has been extended up to September on account of pandemic. Which are the 3 years for which you have to file a return of income? Financial year 2019-20, financial year 2018-19, and financial year 2017-18. You have to file a return of income for all these years. If you have not filed a return of income, then the rate will be 2% for withdrawals between 20 and 1 crore and 5% for withdrawal in excess of 1 crore. Generally, it is only for 1 crore and above. Generally, it is only for 1 crore and above. But if you fail to file a return of income, even when it is more than 20 lakhs, I will start deducting TDS. Is this understood? Is this understood? Yes? So now for all this, we have to file a correction return. We have to do a lot of paperwork for all the corrections which you have done. Okay, if there are any mistakes, the return which is filed originally can be corrected. You can file a revised return and rectify all your mistakes. Again, under which section we were discussing this? Which was the section that was covering this cash withdrawal? Which was the section that was discussing this cash withdrawal? Which was the section there? 194N. C, 194N. Look into this table. 194N is not given here. 194N is not given here. So 194N, there is no lower rate of tax reduction. We will be always deducting that 2% and 5%. COVID pandemic relief is not available for 194N. LA, M and O. Is this understood? So you have been asking me about lower tax deduction, is that applicable and all, but that is not applicable for all the sections. That is what I want to say. It's not 194M, it is 194N Atulya. It is 194N Atulya. Total withdrawal for the whole year, Binoy. Total withdrawal for the whole year exceeds 1 crore. All the limit I have explained here is per year, per annum. Per annum. All the limits which is given here is per annum. So let us do a question from that. Let us do a question from that. 194N. I have been seeing a lot of questions on this 194N, 194M, 194O, the new sections which have been introduced from this year. Okay. Mr. Nihar maintains a savings and current account in Mira Bank Limited. Details of withdrawals are as follows. See, only cash withdrawal is covered. Cash withdrawal. Okay. So we'll add this total withdrawals. 15 plus 20, 35, 35 plus 35. This is single bank. But you have a saving account and a current account there. 35 plus 35, 70, 95, 95 plus 5, 1 crore, 1 crore 22. Is it 1 crore 60 lakhs altogether? Yes. Total withdrawal is 1 crore 60 lakhs. 1 crore 60 lakhs. Nihar regularly files a return of income. Is Mira Bank required to deduct TDS? If yes, what would be the amount of TDS required? What would be the amount of TDS required? 1 crore 60 lakhs is the total TDS which is deducted. Okay. 1 crore 60 lakhs is the total TDS which is deducted. 1.6 crore. So on 60 lakhs, you have to deduct at 2%. 2%. See, that COVID pandemic relief of lower rate of tax is not given here. So 1,20,000 is the answer. 1,20,000 is the answer. 1,20,000 is required to be deducted. Any doubts? 194N. Any doubts? Please be careful about 194N since this is a new section, the amendment which has been introduced. Okay. Another question regarding 194N. Yes. Question number 10. Mr. A has two bank accounts maintained with ICICI and HDFC. From 1920, withdrew the following amount in cash. HDFC 50 lakh. Limit is not applicable. HDFC is 50 lakhs. It is less than 1 crore. So there is no requirement. ICICI Bank 120 lakhs. What shall be the rate of tax deduction? On 120 lakhs, that is 20 lakhs into 2%. 20 lakhs into 2% means 40,000 HDFC has to deduct. Sorry, ICICI has to deduct. HDFC need not deduct. So 10B is the answer. 10B is the answer. Okay. Did you get the answer? $40,000. Again, we have one more question on that. That is why I told you this section is very much important. Mr. Sargun maintained two bank accounts. One is with Canara Bank and another one is Savings Bank. State Bank, Canara Bank and State Bank. Following are the details of withdrawals from these accounts. State Bank of India, if you look into this, you can see that the amount of tax deduction, there is no requirement because 15 plus 14, it will be 29, 29 plus 16. So State Bank of India is not required to deduct TDS. But Canara Bank, if you add together, it is more than 1 crore, Canara Bank. It is more than 1 crore. I think it is 1 crore 20 lakh and 20,000. 1 crore 20 lakh and 20,000. It is a total amount. 1 crore 20 lakh and 20,000. So we have to deduct TDS on 20 lakh 20,000. And let us read the table below. She furnished return of income for assessment year 2021, assessment year 1920 on or before the time limit. For 1819 and 1718, she furnished it belatedly. That is not a problem. You can file it belatedly even after 31st July. The only thing is you have to file it. You have to file it. So when you have filed, that is not a problem here. You have to file it. That is all. So 20 lakh 20,000, we have to deduct TDS at 2%. That is the answer. So is this section clearly understood? 194N? Clearly understood 194N? No room for doubt? I'm asking this again because this is an amended section. So you may be tested upon this. Now let me go to the next new section here. The next new section here. We'll go to the table. It is 194O. 194O is the next new section. E-commerce operator. Let us take an example. Samsung. Samsung is selling its products through Amazon. Is it not? Samsung is selling its products through Amazon. Amazon is called the e-commerce operator and Samsung is called the e-commerce participant. Okay. Samsung is called the e-commerce participant and Amazon is the e-commerce operator. Now you make payment to e-commerce operator, that is Amazon, and Amazon will make payment to Samsung. When Amazon makes payment to Samsung, Amazon has to deduct TDS. So sale of goods or services through e-commerce platform, at what time? Earlier of payment or credit. There is no limit, but there is a note which we have to explain. However small the amount you are making, you have to deduct TDS. However small the amount. Rate is 1% on gross amount of sale or service that happens in that platform. What is the total sale that has happened in Amazon on behalf of Samsung? That is the amount on which TDS is to be deducted. And if you want to get a lower tax deduction, form number 13. But let us see what is this note which is given there. 194.0. There is a note 7 which is given. What does that say? If gross amount of sale or service which is credited to individual or HUF does not exceed 5 lakh, such e-commerce participant has furnished PAN, then TDS is not to be deducted. Let me explain that. I am making sale through Amazon. I am an individual. My total sale during the year is less than 5 lakh. Then there is no need for tax deduction, provided I have furnished my PAN or Aadhaar to Amazon. I am an individual. I am making sale through Amazon. My total sale does not exceed 5 lakh. Then Amazon will not deduct TDS. So let us see a question on that. Let us see a question on that. This is again an amended section. So you have to be careful about this section. 194O. Yes. TPR is a partnership firm. TPR is a partnership firm selling its product through the digital facility which is provided by MKY. So TPR is the participant, MKY is the e-commerce operator. MKY has credited its books of account on account of TPR on 31st January, a sum of 4,80,000. 4,80,000 is the total sale value. Okay. Out of 4,80,000, it was given only 4,300,000. That is not a problem. We have to deduct on 4,80,000. Then further, another person, Mr. Pavan, they also purchased this product from TPR. But what they did is they made payment direct to TPR. See, Let us take Mr. A had purchased a product from Amazon, purchased a product through Amazon. They made payment to Amazon, whereas Mr. B made payment direct to Samsung. B made payment direct to Samsung, not to Amazon. So the question is, on what amount you have to deduct TDS? Is it on 4,80,000 or 4,80,000 plus 40,000? 4,80,000, Mr. A paid to Amazon. Another person, Mr. B, paid direct to Samsung, 40,000. What is the amount on which TDS is to be deducted? 4,80,000 or 5,20,000? Is there any answer? 4,80,000 or 5,20,000? Is there any answer? It's 5,20,000 because we have to deduct TDS on the gross sale that has happened through Amazon. What is the total sale that has happened through Amazon for me, for Samsung? It is 5,20,000. So we have to deduct TDS on 5,20,000. 5,20,000 into, again, 194.0. I think we have a COVID relief there. For 194.0, we have a COVID relief. COVID relief means we can deduct lower amount. We can deduct lower amount. Let us see whether we have a COVID relief for 194.0. Yes, 194.0, we have a COVID relief. So it's not 1%, 0.75% on 5,20,000. 0.75% on 5,20,000. So what would be your answer? What would be your answer? 5,20,000 into 0.75%. Yes, 3,900. Okay. So that is again over 194N. Now, another section here is, which we have to discuss here is 194M. 194M. It's comparatively a newer section. 194 here, earlier, do you remember if we discussed 194J, we told you that if you are an individual and HUF and if turnover does not exceed 1 crore or if you're making payment for personal purpose, then there is no requirement for deduction under TDS under 194J. The same point I had also explained under 194C. Your turnover doesn't exceed 1 crore, and if you're making payment for personal purpose, and there is no requirement for TDS under 194C. So, if you are an individual who is not required to deduct TDS under 194C or 194J, I will also give what is 194H. I will explain 194H also, and then we'll come to this. 194H. 194H is again 194H. Is a person, any person, but individual or HUF is not required to deduct TDS if your turnover does not exceed 1 crore in the last year. You are making payment by way of commission or brokerage. Then rate of TDS is 5%, limit is 15,000. And if you want to get a lower tax deduction, make an application form number 13. Okay. So commission or brokerage exceeding 15,000 is subject to tax deduction under 5% under 194H. But if you're an individual or HUF, last year your turnover does not exceed 1 crore, then there is no need for tax deduction. Okay, now let me come to this section, 194M. You are an individual or HUF, but you are not covered by 194C, 194H or 194J, which means you are making payment for personal purpose. If you're making payment for personal purpose, then there is no 194C, 194H or 194J. Only if you're making payment for official purpose, all these sections will be applicable. So you are making payment for personal purpose. You are making payment to a resident. See, I'm constructing my house. And I'm making payment to a contractor. Or I'm purchasing a house. I'm giving commission to somebody. Or I'm paying professional fees. Architect is designing my house. I'm giving him professional fees. All these are being made for personal purpose. Then if the amount paid exceeds 50 lakhs, such a huge amount if you are paying for personal purpose, then you have to deduct TDS at 5%. Rate of tax deduction is 5% earlier of payment or credit. If you're making payment for official purpose, you'll be already covered under 194C, JH, etc. If you are making payment for personal purpose and the payment is so huge in the sense, if it is more than 50 lakhs, then you have to deduct TDS under this section 194M. Did you understand this section? What was 5 lakh limit in note? Which note, Rida, are you talking about? Which note? Which note? 194O. Okay, 194O, the limit is, see Rida, I am an individual. I am selling through Amazon and my total sales through Amazon does not exceed 5 lakh. You are an individual and HUF and your total sale through Amazon does not exceed 5 lakh. Then there is no requirement for tax reduction. Is this understood, Rida? Okay. But that one 5 lakh limit is applicable only for 5 lakh limit is applicable only for individual or HUF. Personal purpose and the amount paid exceeds 50 lakhs. Huge amount you're making payment. Amount exceeds 50 lakhs. Okay, Ashik. Now, another section which is introduced during this year is amendment. Another section which is introduced is 194K. 194K. This is another section which is introduced during the year. 194K. 194K is, you know that from the current year onwards, dividend received is taxable in the hands of the shareholder. There has been an amendment. Dividend received is taxable in the hands of shareholder. Okay. So also amount received from mutual fund or amount received from units of UTI, that is also taxable in the hands of shareholder. Okay. Income received on mutual fund. Income received from mutual fund or income received from units of UTI, that is also taxable in the hands of shareholder from this year onwards. So when the mutual fund company or UTI, they pay you dividend or income, whatever name you call it, then you have to, they will deduct TDS. Earlier, there was no need for this section 194K because income received from mutual fund and income received from UTI was exempt earlier. So there was no need for TDS reduction. If income is exempt, then there is no need for tax reduction. But from this year onwards, income received from units of mutual fund and UTI are taxable in the hands of the recipient. If it is taxable, then they will deduct TDS. So that is 194K is what about any person, resident, income in respect of units of mutual fund or UTI. See, what I'm talking about here is the income in the nature of dividend, not being capital gains, not sale value. Earlier of payment of credit, limit is 5,000, rate is 10%, form number 13 if you want to get a lower tax reduction. Okay. Now, there is another comparatively new section which I have to explain. It's 194IB. 194IB. Let me explain 194I and then come to 194IB. Okay, 194I is regarding rent payment. Rent, if you're making payment, we have to deduct TDS. So any person is paying rent to a resident. Any person is paying rent to a resident, we have to deduct TDS. And of course, individual HUF, if he is making payment and the turnover does not exceed 1 crore or 50 lakhs, then there is no requirement for tax deduction. At what time TDS is to be deducted? Earlier of payment of credit. Limit is 2,40,000, but 2,40,000 is per person, per owner. What I mean by that is, if it is a joint property, and the amount of rent is 4,80,000 and there are two persons there, rent is 4,80,000, but there are two owners, there is no need for tax deduction because 2,40,000 is per person, per owner. Per owner, per year, per owner. Then rates for plant and machinery is 2% and 10% for land, building, furniture. If you want to get a lower tax reduction, it's form number 13 or form 15G. Now let me come to 145IB. It is related to 194I. That is why I explained both together. 194IB. See, last year your turnover was not 1 crore. Okay, your turnover was not 1 crore. You are making payment to a resident by way of rent, but the amount of rent which you are paying is too high, like 50,000 per month and all you are paying rent, 50,000 per month or part of the month. Then the TDS has to be deducted. But TDS need not be deducted monthly. TDS need to be deducted only in the last month. That is only in March 2021. Only in March 2021, TDS is to be deducted. But if you vacate the property before March 21, that is if you vacate the property in January 21, then you have to deduct the entire TDS for the whole year in the month of January. Okay, rate is 5% and form number 13 and 15G is not applicable. Let me explain this with an example. Okay, let me explain again with this an example. Rent is 55,000 per month. Okay, 55,000 per month is rent. So last year you are not subject to audit. You are doing only salary. There is no audit and all. You have only salary income, but you are paying a rent of 55,000 per month. So you'll be liable to deduction under section 194 IB. Now let us see what is total rent for the year. What is total rent for the year? Total rent for the year is 55,000 into 12. Is it not? 55,000 into 12 means 6,60,000, and TDS is 6,60,000 into it's 5% generally, but current year is 3.75% on account of the pandemic and all. It is 3.75%. And let us see whether 194 IB is subject to that lower tax deduction. Let us see that whether 194 IB is subject to lower tax deduction. Yes, 194 IB, pandemic relief is available. Pandemic relief is available for 195 IB. So 6,60,000 into 3.75% is the TDS which you have to deduct. $6,60,000 into 3.75 by 100, 24,750. This is the total TDS for the year. Okay. This is the total TDS for the year. Now, when would you deduct this TDS? When would you deduct this TDS of 24,750? You would deduct TDS from March payment. March 2021 payment. When you pay rent, you won't pay 55,000. You will pay only 55,000 minus 24,750. This is the rent which you pay in March. Did you understand? This is a rent which you pay in March. Only in March you will deduct TDS. Every month you need not deduct TDS. Every month you need not deduct TDS from 55,000. 55,000 into 3.75. 55,000 into 3.75. You need not do that. Whole year calculate what is rent. 6,60,000. That into 3.75%. And this will be your total TDS deduction. Suppose, next point, suppose you vacate in January 21. You vacate the property in January 21. March 31st January 21, you vacate the property. 31st January 21. So here rent is paid only for 10 months. So 5,50,000. 5,50,000 into 3.75 will be deducted in the month of January. Is this understood? Okay. Now, do you know something that 243, what is that? What is 243? Are you talking about 234 interest? Interest. Right. I think I will move on to TCS, and from TCS I will go to 234. Okay. So all other sections here are the old sections. All other sections: salary, payment of interest, 194, dividend. See, since dividend is taxable from the current year onwards, we have to deduct TDS when you give payment of dividend to the resident shareholder. Rate is 10%, 13 and 15G is applicable. All other sections are the old sections. There is nothing new. I think I have covered almost the latest sections. I I have completely covered, latest sections. So let me move on to TCS and then we will go to interest, right? TCS. Is that fine? Is that fine? TCS, again, we have some amendments. All the latest amendments in TDS I have completed, right? And all other sections, you just see who is the payer, who is the recipient, what is the rate, all those things. Okay. TCS is applicable. There is again a prepaid tax. TCS is again a prepaid tax. Full form is tax collected at source. Tax collected at source is what the full form of TCS stands for. This is how this happens is there is a buyer and a seller. There is a buyer and a seller. Buyer sells a product. Buyer sells a product. When he sells a product, buyer collects from the seller. Buyer collects, that is why it is called as TCS, tax collected. He collects from the seller TCS also. So in the bill, I will mention sale value 5 lakh. I will collect at TCS. TCS, let us take 2%. 2% means it will be 10,000. So the buyer will now pay 5,10,000. Okay. Buyer will now pay 5,10,000 and 10,000 will be deposited. 10,000 will be deposited by seller on behalf of buyer. On behalf of buyer. 10,000 will be deposited by seller to the income tax department. So it is as if buyer is going and depositing it and seller will be actually depositing it to the income tax department, but for the buyer. So it's like TDS, you can claim the credit of it. The buyer can claim the credit of it. It will lie in his credit in the income tax department. But again, as I told you, not all products are subject to TCS. Only certain products are subject to TCS. So now, did you understand how this mechanism works? Buyer and seller, buyer sells a product, he will collect TCS also, and he will deposit that to the creditor, the income tax department. So when I sell something to say Mr. A, I will collect from Mr. A that TCS element also, and I will deposit that to income tax department on behalf of Mr. A. That is a mechanism. Now let us see what are the various products. It is to be collected on amount inclusive of GST. Amount inclusive of GST. It is to be collected on amount inclusive of GST. Now, what are the various products upon which we have to collect TCS? That is what we are now looking into. Let us see. Let us see the table. There are five sections. 5 sections upon which TCS is to be deducted. The entire TCS provisions are governed by 206C. 206C. There is subsection 1, 1C, 1F, 1G. 1G there are 2, 1GA and this is 1GB. Sorry, 1GA and 1GB and 1H. Okay, so there are 5 sections. There are 5 sections under which I collect TCS. One is subsection 1. Subsection 1. Then there is 1C, 1F, 1G, and 1H. Let us see what are the various sections. 206C1. Who is the seller? Any person. But again, individual HUF, if your turnover does not exceed 1 crore or 50 lakhs in the last year, as explained there earlier, he is not liable to collect TCS. Who is the buyer? Buyer is any person, but except, see the word I have used here is except. Except. So if I am selling to these persons, government, embassy, club, PSU, public sector undertaking, buyer in retail trade for personal consumption, somebody who is buying it for his own use, then there is no need for TCS collection. I am selling to government, there is no need. Any person except the following: government, there is no need; embassy, no need to collect TCS; club, no need; public sector undertaking, no. If you are buying it for your own personal use, for your own consumption, no need. Now let us see what are the types of goods which are covered under this section. When should you collect TCS? Alcoholic liquor for human consumption, scrap, mineral oil. For all these three products, it is 1%. 1%. Okay. Then 10 leaves. 10 leaves is that which you use for beading, 5%. Timber and other produce, 2.5%. Let me ask you one question. The long queue standing before Kerala State Beverages Corporation, people standing there, whether the Kerala State Beverages Corporation will be collecting TCS from those persons. Kerala State Beverages Corporation, whether they will be collecting TCS from those persons. No? Why? Buyer. Buyer is not government. Buyer, Abbas, buyer. Personal consumption, that is it. Personal consumption. All those persons standing there, they're using it for their own consumption. So there is no TCS required. But suppose Kerala State Beverages Corporation sells this to a bar situated in Calicut. Let us take, there is a bar in Hotel Taj. Hotel Taj purchases alcoholic liquor in huge cases from Kerala State Beverages Corporation. In that case, Kerala State Beverages Corporation will collect TCS from Hotel Taj. Because Hotel Taj is not using it for their own consumption. They are using it for resale. Did you understand? Abbas, I hope you are you also stand corrected now. Okay, next item. So that is regarding section. No, seller collects TCS from buyer. Seller collects TCS. Did I make a mistake when I explained that? Oh, sorry. Your name is Kozhikode Foodie. Seller sells a product. Seller sells a product. Seller collects TCS. Seller collects TCS. Kozhikode Foodie, I have corrected. Seller, whenever he sells the product, he is collecting TCS. I'm so sorry. Okay. Then, what was that? Next point. 206. Next section. So one was regarding the specific products which I had mentioned there. One was regarding those specific products which I had mentioned there. Now let me come to next product under 206C, 1C. 1C. I'm not able to share my table. Can you see my table? Okay. What is the next section? 206C, 1C. Again, any person, he is a seller, he will be collecting TCS. But again, if no, Abbas in TDS, it is a buyer who is making the payment. Buyer who is making the payment, buyer will be deducting TDS. Person making the payment deducts TDS. Person collecting money collects TCS. Abbas, I think that is clear. Right. 206C1C. Who is the seller? Any person. But of course, individual or HUF not required to collect if turnover doesn't exceed 1 crore. Who is the buyer? Buyer again, any person except, same definition, any person except government, embassy, club, PSU, buyer in retail, rate for personal consumption. Here the product is, or the service is parking lot, toll plaza, mining and quarrying, rate is 2%. Now, next section, almost similar, the product only changes. Only the product changes. Next section, 206C1F. Any person, again individual or HUF is not required to collect TCS if the payment doesn't exceed 1 crore. Who is the buyer? Any person except government, embassy, local authority, PSU engaged in the business of carrying passengers. Whom I have excluded here. If you compare the buyer earlier person and this person, what is the difference between these two persons? 206C, the earlier two buyers and this buyer. Who is excluded from this? Who is excluded? Here, personal consumption was excluded. But here, in the next section, personal exemption, yes, even if you are purchasing for personal purpose, there will be TCS. That is what I want to explain. In 1F, even if you are making for personal purpose, even if you are purchasing for personal purpose, there will be TCS. Okay, club is also there. And another important point is, but that personal use. Even if you are purchasing for personal use, there will be TCS because the product which we are covering is sale of motor vehicle exceeding 10 lakh. If you are purchasing a very luxury car having a value of more than 10 lakh, the car dealer will collect from you TCS of 1%. Car dealer will collect TCS of 1%. Okay. So even if that car is used for personal purpose, this rule is applicable. Now we are going to the important sections, the amendments which we have introduced from this year onwards. 206C1G. 1G has two subsections, point A and point B. And there is 1H as well. 1G has two subsections, A and B, and there is 1H. So these are the three new sections from this year onwards. Let us see what are those sections. First one is authorized dealer in foreign currency. Let me explain how this happens. I have to remit, let us take, my child is studying in a university abroad. Okay, I have to remit fees. I have to remit fees to that university. So obviously I'll have to take the help of a foreign exchange dealer, authorized dealer in foreign currency. So I approached a bank, State Bank of India. I went to bank and then I told that we have to remit so much amount of US dollar or whatever we have to remit to that foreign university. So authorized dealer in foreign currency is selling their services to me. They are selling their services. They will be collecting money and they will be charging some service charges as well. And to whom they are giving the service? Any person, but except government, embassy, local authority. Now, if I am remitting an amount of 7 lakh or more outside India, under this liberalized remittance scheme, that is a special scheme of Reserve Bank of India. You need not go into the details of all that. You just understand that it is a liberalized remittance scheme of State Bank of India, and the amount which you are remitting is more than 7 lakh. Then State Bank of India will collect from me a TCS of 5%. Okay, they will collect from me not only 7 lakh, but another 5% TCS. But of course, if this amount I am remitting is out of an educational loan, which I have taken from a financial institution, then the rate of TCS will be 0.5%. Is this understood? So this is a new section. I'm remitting money to State Bank of India for the purpose of providing for the purpose of making some foreign payment. For the purpose of making some foreign payment, and then they will collect from me additional TCS of 5%. But this fees, if I am paying out of an educational loan, then it is 0.5%. Next point, there is an overseas tour package. I am going for a European tour. And I have approached these, some SOTC, some foreign tour operator. And again, on that tour package, when they are selling the tour package, they will be collecting from me TCS 5%. So I have paid them 2 lakh. 2 lakh is the amount which they have given for the overseas tour package. 2 lakh is not the amount which I have to pay them. I have to pay an extra 5% as well. But again, if you are if you are rendering the service to government, embassy or local authority, this rule is not applicable. And last case, this is another new section. The seller's turnover in the last year is 10 crore or more. See, this is applicable only if your turnover is more than 10 crore. Earlier, the limit which we had discussed was 1 crore and 50 lakhs. Here, the turnover is 10 crore or more. So, let us take Hero Motors. Hero Motors, their turnover is more than 10 crore. They are selling goods to any person, but not government, embassy, local authority or importer. Okay, then they are selling goods for an amount of more than 50 lakhs. Mr. A in Calicut is purchasing goods for 50 lakhs or more. Then Hero Motors will collect from Mr. A 0.1% TCS. So there are two conditions. One is turnover of the seller shall be more than 10 crore and the sale which I am making now is more than 50 lakhs. Only if both these conditions are satisfied, there will be 0.1% TCS. But this rule is applicable only from 1st October 2020. This section has been introduced only from 1st October 2020. So only for sales that have happened after October 2020, this section is applicable. Only for sales that have happened after 1st October 2020, this section is applicable. Again, in the view of this COVID pandemic, we have reduced the rate by 25%, but not except in the case of 206C1G. That foreign payment and tour operator, there we have not reduced the rate because in this era of pandemic, I don't think you'll be going for any tour package outside India. So there is no rate of tax, lower tax collection. How is that? TCS also. Any doubts? I think I have time for interest as well. We can go up to 5 o'clock. Vishnu, can we go up to 5?
Yes, ma'am. Yes, ma'am.
Okay. Any doubts in TCS? TCS, as I told you, the last three sections, 1GA, 1GB and 1H was introduced only from from assessment year 21-22, especially 206 1H is from 1st October 2020, especially. So only for the sale consideration which is received after 1st October 2020, this 206C 1H will be applicable. Any doubts? One is direct tax and the other is indirect tax. Two taxes, two departments. Tour package, there is no limit. No limit. Foreign tour package, definitely that will be a huge amount. Overseas tour package, that will be a huge amount. So anyway, there is no limit. You cannot go for a 5,000 rupees for an overseas tour. TCS even then cannot be called as a tax on tax because you are claiming it as a deduction from your total tax liability. There is ultimately no burden upon you. It's not like indirect tax. Indirect tax is definitely a burden. You have to bear it. But TCS, you are claiming it as deduction from your final tax liability. So it cannot be called as an extra burden. Okay. (194Q). 194Q. 194Q, the latest section. I'm so sorry, Nimya, that is not applicable for your exam. That is applicable only from 1st July, some other time. That is not applicable for your July exam. I'm so sorry, because I have to explain something else which is very much essential for your exam. Or let me see if Vishnu permits me to explain that. after the session, or you can call me if you want.
Ma'am, it's okay, ma'am. It's okay.
Right. What I was supposed to talk on was that which is applicable for the exam, July exam. That is right. Nimia, you can call me if you want later. Right. I'll be sharing the TDS and TCS table. I'll be going to interest now quickly for 234 B and C. Are you doing articleship, Nimia? Or else you will not be aware of section 194Q. Are you doing articleship? Okay, that is what I thought. Otherwise, you will not be aware of the section. Okay, so I was talking about 234B and 234C interest. Somebody had wanted the section right at the beginning of the session. I think it was Neil, and I think I wonder if he is still there in the session. He was the one person who asked to talk me about 234B. Okay, Vishnu. All right. I'll inform you before I end the session. Right. What is 234B and 234C interest? There is another interest also, which is called as 234A interest. But 234A interest is nothing connected to advance tax. It is that interest which we have to pay if there is a delay in filing return of income. If there is a delay in filing return of income, generally we have to file a return on 31st July. We all know that. But if there is a delay in filing return, that is we are filing only in September, there is 2 months delay, then we have to pay an extra interest for 2 months. And rate of interest is 1% per month or part of the month. So July, if I don't file, and if I file in September, then I have to pay 2% interest. If there is 6 months delay, I have to pay 6% interest. So there are 3 interests which we have to pay to the department. One is 234A interest. That is nothing connected to the advance tax. It is for delay in filing return of income. Second is regarding 234B interest. 234B interest is for non-payment of advance tax. That is our topic, non-payment of advance tax. And 234C interest is for deferment of advance tax. Deferment of advance tax. I'll explain what do you mean by that deferment, okay? 234B interest is for non-payment and 234C is for deferment of advance tax. Is this screen shared? Is this screen shared?
No, ma'am.
No. I think every time I change a table, isn't there an option to share the entire screen? There is only a window. Now is it shared?
Yes, ma'am.
Okay, so 3 interests, 234A, 234B and 234C. 234A is for delay in filing return of income, 234B is non-payment of advance tax, and 234C is for deferment of advance tax. Let me first explain what is 234B interest. What is 234B interest? Let's assume that my estimated tax liability is I assumed that my total tax liability was 5,50,000. Okay, 5,50,000. That was my assumption. My tax liability is 5,50,000, and I paid them in 4 installments, like 1,25,000 on 15th September 2020. I paid 2 lakh. On 15th December 2020, I paid 1,35,000. And on 15th March 2020, this was an honest estimate which was made by me. Honestly, I thought this is my total tax liability. $5,50,000 minus 1,25,000 minus 3,35,000. What is the difference? What is the difference? $90,000. This is how I paid my advance tax. Okay. This is how I paid my advance tax. And my actual tax liability. Okay. When I filed my return on 31st July 2021, my actual tax liability came up to 7,50,000. But of course, there was a TDS of 1 lakh. There was a TDS of 1 lakh. So finally, I should have paid from my pocket. See, I should have paid from my pocket 6,50,000 from my pocket. Did you understand that? There was TDS, there was TCS, somebody else had deducted TDS and TCS, and all that amounted to 1 lakh. So I should have paid 6,50,000 from my pocket. But see, I understood that I had paid only 5,50,000. Okay, that is what the advance tax liability stands at. This is 15th March 21. Sorry, this is 15th March 21. When I completed that year, finally on 31st July, when I computed my total income and all, I understood that my total tax came up to 7,50,000. There was a TDS and TCS 1 lakh. So from my pocket, I should have paid 6,50,000, but I paid only 5,50,000. Now 234B interest is, you have not paid at least 90% of your assessed tax. That is estimated tax. 90% of your tax liability. Let me take it that way. You have not paid 90% of your tax liability. That is, the Act doesn't expect you to pay the entire 6,50,000. Act doesn't expect that much accuracy from you, but at least 90% of 6,50,000 should have been paid by you as advance tax. At least 90% of 6,50,000. How much is 90% of 6,50,000?
5,85,000.
How much? 5 lakh?
85,000.
Okay, 5,85,000 at least should have paid by you, but you paid only 5,50,000. So there is a shortfall on which you have to pay 234B interest. Had you paid 6 lakh, as advance tax, there is no 234B interest. Had you paid 6 lakh. So I don't expect you to be so accurate and pay 6,50,000, but you should have paid. I'll give you a margin of 10%. 10% leverage is always given. So at least you should have paid 5,85,000. You paid only 5,50,000. So 234B interest is payable. Did you understand? And how much do you pay? How much should you pay as 234B interest? That also let me explain. How much you should have paid as 234B interest. See, your shortage is 1 lakh. Even if the shortage is 90%, once there is a shortage, you have to pay interest on the entire amount of shortage, not on 90% minus amount paid, not on 5,85,000 minus 5,50,000. You have to pay interest on your total liability minus 6,50,000 minus 5,50,000. 1 lakh into 1 by 100. 1 by 100. That is, rate of interest is 1% per month. 1 by 100 into 1 by 100 into. You should have paid by 15th March 2021, is it not? And that was the date on which you should have paid the advance tax. So you should have paid it on 15th March 2021. So the liability starts from 1st April 2021. Delay starts from 1st April 2021. April, May, June, July. If you are filing your return in July, then 4 months. If you're filing your return in September, then 6 months. If you're filing your return in October, 7 months. If you're filing your return in December, another 1 month, that way. So for a 90% shortage, you are paying tax on the entire interest. You are paying interest on the entire shortage of 1 lakh, not on 35,000 shortage. You are not paying interest on 35,000 shortage. That is 5,85,000 minus 5,50,000 is not the amount on which you have to pay interest. You have to pay interest on entire 1 lakh shortage. Is this understood? Interest starts from 1st April 2021, from the beginning of the year, from the beginning of the assessment year to the date on which you are actually filing your return. So that is 234B interest. Any doubt from that? Any doubt? Amount on which interest is calculated is, first of all, when does this liability arise? Liability arise if you have not paid 90%. Then the interest is calculated not on 90% minus amount paid. Interest is calculated on entire liability minus amount paid. Rate of interest is 1%. And interest will be calculated from 1st April of the assessment year to the date on which you are filing return. Those who are doing articleship, you will be familiar with all these calculations, I believe. Anything to be explained further? Yes, assessed tax minus actually paid. Assessed tax minus actually paid. Assessed tax means actual tax minus, this is your assessed tax. This is your assessed tax. Actual tax minus TDS is your assessed tax, which is tax which is payable. Real me is a calculation understood. What about others? Okay, now let me explain 234C. 234C. 234C is for delay in payment of each installment of advance tax. Delay in payment of each installment of advance tax. Let me explain that. We have understood that our total tax liability now, which I have to pay from my pocket, is 6,50,000. You see, I should have paid 6,50,000 into 15% here. On 15th June, I should have paid 6,50,000 into 15%. Here, I should have paid 6,50,000 into 45%. 45% for delay in each installment. We are calculating 234C. So we have to calculate interest on each and every installment. Each and every installment. I hope you will not be tested upon this for your exam. Definitely, I have seen a question in the MCQ for 234B calculation. For 234B calculation, I have seen an MCQ, but for 234C calculation, there has been no MCQ. This is slightly difficult. Anyway, let me explain. So if my actual tax is 6,50,000, I should have paid 6,50,000 into 15% on 15 June. I should have paid 6,50,000 into 45 on 15 September. I should have paid 6,50,000 into 75% on 15 December and so on. And there's 6,50,000 on 15th March, but I have not paid that much. So let me calculate how much is my shortfall. How much is my shortfall of each installment? I have to add up all these and then I have to calculate the interest. Okay. I have to add each shortfall. How much is 6,50,000 into 15%? 97,500. Okay. There is no shortfall here. So shortfall I will give in the next table. There is no shortfall here because I have paid 1,25,000. Okay, so there is no shortfall. There is no interest there. Here, I should have paid 6,50,000 into 45%. 6,50,000 into 45% means 2,92,500. 2,92,500. I have paid 3,25,000. I have paid 3,25,000. So here also there is no shortage. Here, 6,50,000 into 75% I should have paid totally. 4,87,500. See, 4,87,500. Here I have paid only 4,60,000. Up to 15th December, I have paid only 4,60,000. So my shortfall here is 4,87,500 minus 4,60,000, which is equal to 27,500. And here, 6,50,000 minus 5,50,000, there is a shortfall of 1,00,000. I should have paid the entire amount of 6,50,000. So there is shortfall is 1 lakh. This is the shortfall for each installment. Here there is no shortfall because I have paid 1,25,000. I should have paid only 97,500. Here also there is no shortfall because I need to pay only 2,92,000. I have paid 3,25,000, 1 and 2 together. Here 4,87,000 and 6,50,000. Now here there is no interest. Here there is no interest. Now how do you calculate this interest for these two shortfalls? Just understand that for first, second and third installments, we calculate interest for 3 months. Here we calculate interest for 3 months, and for the last installment, we calculate interest for 1 month. There is a logic and all for all that, but let's just read that. Here we calculate interest for 3 months. For first 3 installments, we calculate interest for 3 months, and for the last installment, we calculate interest for 1 month. So it will be 27,500 into 3 by 100. And here it will be 1 lakh into 3 by 100. So this is the total interest. 1 lakh into 1 by 100, 1 by 100. Total interest will be 1,825. 1,825 is total interest. This is how we calculate interest. So interest for first 3 installment is calculated. No, rate is not 3%. Rate is 1%, but we calculate for 3 months. 3 months, 1% per month or part of the month. First 3 installment we calculate at 3% then. 3 month means 1% into 3 will come to 3%. 1% per month. And last installment we calculate for 1 month. All right. So I think I have completed. It was too short a time, 3 hours for this chapter. Generally, if it had been a regular class, I would have taken more than 8 hours for this session, TDS, TCS and ADVANCED TAX. So even then, I think I have done little justice to what I am allotted. Any doubts you can ask. The questions and all. Let me see if I can do anything here itself. Round of tax liability after interest. Yes, after interest.